Hey, it's Douglas Beck with the Growth Collective. In this video, we're tackling a big question. Where do you actually find accredited investors for large real estate deals? If you've been relying on outbound marketing with little success, it's time to shift your approach. I'll break down how to connect with high net worth individuals, fund managers, and the right groups that can fund your next big deal. But before we dive in, make sure to hit that subscribe button so you don't miss more insights on scaling your real estate business. Let's get started. First got started in the business, and a struggle I had and struggle you guys might have of doing outbound marketing, direct mail, pay-per-click, whatever, paying all this money for marketing, getting like trickling back barely anything. It was so much more difficult, but in reality, many of us really just want to get more deals done and get on bigger deals. And the way to do that is not by doing outbound marketing. It's by getting into connection with the right people. So get connected to people that already do the thing that you want to get into. If it's commercial, go find groups that do commercial. I can be a conduit for that for you guys, right? If it's getting into capital and raising capital or investing capital or lending capital, there's groups that do just that. But whatever that thing is, you want to plug into those different groups and then essentially find out where you bring value. So maybe the value is let's say I'm working on the capital side, like I have a group that I work with for capital. I'm looking for deal flow because their deal, they already have the capital, they need deal flow. So my responsibility might be, if you're listening, like I'm looking for bigger deals that meet their criteria. So multiple times a week, I'm looking at opportunities saying, hey, would this work for so-and-so? Would this work for so-and-so's group, that group, whatever group? That's what I do outside of just doing smaller real estate investment deals. I'm looking for the match of what I did in the beginning, which was what? Remember, I had a guy named John who had a contract on the property, and I brought a guy named Rich, who's not the same Rich that coaches on Tuesday or Thursday, but Rich probably has done this before, where essentially John's deal plus Rich's capital, which is actually another person, it was lender that gave him most of the money, but John's and Rich's connected, and I was in the middle of that, and because of that, I was able to make a wholesale fee. So check it out. It's no different, except the difference is on a residential piece of real estate or a piece of real estate, residential, maybe it's a few $1,000s. On these bigger deals, it could be tens of thousands or hundreds of thousands of dollars. Like, it's not hyperbole. I'm telling you guys factually what is feasible. So here's where we're at, like kind of putting this whole thing together. Right now, we're getting ready to ramp up our wholesale business, right? And our wholesale business is going to have a massive amount of different things going on with it as far as people involved and process and all this. I'm going to share my screen and kind of show you what that looks like. This is kind of what the wholesale business looks like as of today, okay, as far as the goals, all right, just to give you guys an idea. So wholesale expansion, I don't know if you can see this or not. I'm going to kind of zoom in. So a lot of numbers, a lot of things, but acquisition, disposition, BDR stands for business development rep, okay, and then ops manager, I think you guys know what that means. Tech and communication is for, supporting, like as far as the team having email, having phone, all that stuff per person. There's 33 people. The plan is here. And then SMS marketing, just like it sounds, sending out text messages. Why would we send out text messages? Well, because we have a network of people. We need to communicate with them. Text is actually one of the best ways to do that, right? So we have budget for that. We have some paid ads. That's to get connections, not to get deals. Generally speaking, that's our plan. And then core VAs, it's existing staff plus some existing leadership. And these are some targets and adjustments. All this to say that over the course of a 6-month period, we're kind of getting ready to raise about 1.6, 1.7 to have a little cushion there of capital. Million, that is 1.6 to 1.7 million. Each of these things has, 26 weeks, which is 6 months of runway, meaning that I'm going to have operating capital in the company. The goal is to have that available for the next 6 months without having to cut into profits or operational revenues coming from the deals that are going to close. Well, what does that look like from a projected revenue standpoint? Well, each deal, we're doing 10 BDRs. So 10 BDRs, one deal a week closed by each BDR is 40 deals a month. I know it sounds exciting, and I think that's what this is modeled out at. It's 12.5K per 10 deals. Actually, this is per week, I believe. Yeah, so that's about 40, 50 deals. This is a run rate that we're going to get to over the course of a few months, right? This is across not just one market, to be clear. This is across many markets. This is 10 MSAs, 3 to 5 states, probably 6, 7 states, honestly, after we looked at it some more. But to give you an idea of what's ahead for us, and this is going to be something that I'm not involved with on a daily basis, leading per se from a transactional standpoint of like running the business part. Okay, so there's going to be other people put in place to do this. I'm going to be there to support and run, but I want to inspire you guys. So what that looks like is on a 1.6 mil with a 3.2. Even if we do a little less than this, it's 2 times in a matter of 6 months. The projected net per week is 63. That's the target, right? We might get to 5, 10, 15 for the first couple months or first few weeks, whatever it is, but that's the target. And we're not going to bring all these people on all at the same time. We're going to just model out like if we had everybody on immediately, if we had all the deals coming right away, this is what it would kind of look like. It's going to be a ramp up. So what does that mean to you? Well, you could be a part of this whole process. You could be those of you listening today have the opportunity. You guys could be a part of this from a perspective. I mean, some of you are on my team and you're already on the JDL team. You're VAs. You're part of the core team. You could be part of the dispo. Like we've talked about that with some of you as well. Those of you that are clients of ours, you could potentially look at a BDR type of role, for example. It's not to take anything away from you, but it's to say, could we give you an opportunity to be participating in something much bigger than maybe you thought you could do by yourself? That's an opportunity that might exist for some or all of you, right? It exists for all of you, but some of you may may choose to do that. It's more, everybody's situation is a little different. So again, we're not trying to take anything off the table if we were adding to it and giving you opportunity. Some of you are like, I don't need a day-to-day type of thing. I want to run a team. I want to run an operation. Well, that's something that maybe a few of you might be qualified to do and could look at. But at the end of the day, I want you to at least be inspired by the activity that we're planning on getting going in the next, few months here, basically. From the holidays into the new year, this is the plan to get this going. We're already doing things to get this going. We have one deal up in New Jersey that's looking fruitful. We have a couple down in Florida. We have more coming, and there's plenty of opportunity. It's not like a shortage of that. It's really just a matter of getting it organized. With that said, if this is a business that is run by others, right, then what is Doug going to do? Well, I don't have that exactly, but I'm going to show you an example of something else. So this is for an investor that I put this together, and I'm going to share it with you guys to give you even some more sort of, this is a little advanced, but I think you guys that are in the room can track this and we can talk about it later. So on the lending side, this is an example that from one of the groups I was working with in the past had this model. Many lenders actually have this model in some capacity. There's using general partners that are using either access to credit facility or credit line, a warehouse line of credit, what some people will call a repo line or different things they call that, to basically leverage their capital base. Now think about this like this. A bank, right? What does a bank do? They have deposits and then they have lines of credit that they can extend with their credit cards, and they can use like business lines of credit, personal lines of credit, etc. Banks operate in a similar model. Whatever they have in deposits, they can lend a certain multiple of that. So in the private lending commercial debt space, it's no different actually, believe it or not, if you have the right people, if you have the right facility, right? So there's actually multiple groups that provide these what are called credit facilities or warehouse lines of credit specifically for making, for example, first position loans. So I was talking to somebody the other day and they said, hey, I got like about $1 million liquid somewhere between my self-directed account, between that plus my brokerage account, plus this account. I could put like $1 million here. I said, hey, let me show you what it would look like if you had a fund, like just as an example. Okay. If you had a fund, if you took your $1 million and you, by the way, your million, quote unquote, could be someone else's million that you partner with, or you're someone else's 500,000 or someone else's 100,000. The numbers don't matter that much. It depends on the deal size that you want to do. Okay. If let's say the monthly loan volume was $4 million on this deal, right? It's a 75-25 model. So meaning like we're using 25% of our capital and then getting leverage for the other 3 million. So that's 4 million on a monthly basis. If the origination is 2.5%, that's $100,000 a month of origination. Well, here's a question. What's $100K compared to the $1 million liquid investment? Well, that's 10%. Well, how did we go from 2.5 to 10? We went from 2.5 to 10 because we used leverage. But check this out. This is first position, for example. What is first position debt usually originated at? Well, it's 80 to 90% loan to cost, 70% loan to value, ARV, right? LT of ARV. So if that's what the case is, then are we really giving out $4 million on $4 million worth of real estate? No, it's first position. So it's safe in that way, right? It's also discounted against the value in the property. There's also value add in this example of fix and flip. So if I'm giving the 4 million to borrowers, for example, in this model, and it's discounted because of the values and because of the money they're putting down and all that stuff, really to get 10% on $1 million and $100,000 in a month. Well, wait, what do you mean a month? I thought, well, the first month is origination. The first day, actually, at closing, you get the 100,000. Every time you close a deal, 2.5%, 2.5%, 2.5%. In this example, how do we make that monthly, Doug? What do you mean? How does that work? Well, here, let me show you a couple more things. And just to make sure we're clear, okay? Because I trust you guys, I love you guys, I want to see you do well. But in case somebody thinks that they own this spreadsheet, I'm the one that created the spreadsheet, just so we're clear. Not you guys, I'm saying that too, but if anybody else happens to hear about it and it goes anywhere, I created the model and it's my model. It's not anybody else's, okay? So just in case we're wondering, you could probably put 2 and 2 together, but at the end of the day, I'm not mad at anybody. I'm just saying, like, I'm using this because I came up with the concept, and at the end of the day, others used it and adopted it in the model that was used, but it was slightly different, and there was some challenges with that, and I'll get into that in a second. Here's the deal. 12%. 12% is like, let's say, what they call the coupon rate, the interest rate, okay? 12% on a monthly basis on $4 million of loans is $40,000 a month. That's what's being collected. Now, what can I pay to a group of investors or an investor who has the $1 million? I can give them all 40, and I get their 12%, or I can give them less than that. So there's different things here that I don't want to confuse you, but let's just say, for argument's sake, okay, let's just say that this 40 of that, let's say instead of giving them 12 down here, this monthly debt service, let me hide a couple things so you guys don't get confused. It's too confusing maybe if you're just looking at it for the first time. Let's say that this was 8%, okay? The monthly debt service, who does that go to? Well, that's going to go to the investors maybe, or maybe this was 9%, or maybe even if it was 10%. If I'm able to do this, if I'm able to generate $4 million in loans using $1 million of my own money and $3 million of somebody else's, which is available through certain institutional lending facilities, and operate in first position, these kind of terms do on average, let's say even 2% a month, for example, to be conservative, 2% origination. At 12%, and I'm selling the note, which I'm going to tell you about in a second, at 10%, or I'm giving an investor 10%, if the $1 million investor has the 10%. Each month, as we liquidate these notes, which I'm going to talk about in a second, we're making $57,000 $56,667 basically. That's 5.7% a month on the liquid investment that's being invested. Example, okay? That doesn't include the fact that this could be going to this capital investor. This could be your business partner, for example. This could be somebody who's a wealthy family member, or a friend, a doctor, an attorney, somebody you know that's in your sphere. These are people that you need to have conversations with to know that this is possible, okay? I'm going to give you a quick synopsis. There's people that are, people I know that are doctors, cardiologists, veterinarians, pilots, dentists. These are the type of people that would have $500,000, million, $2 million liquid in a brokerage account that would be interested. People that are corporate executives. These kinds of people you want to be in connection with, not because I said so, because you need to know this and you need to be connected with those people to see how you could be the conduit to the next deal. It doesn't need to be this particular situation, but those people are generally accredited investors. Those people have options of what they can invest in. They might not know that what you're doing is the next best option for them though, but you need to be able to understand that, guys. All right, I hope this gave you a clear roadmap on how to connect with accredited investors and high-level deal makers. The key is relationships. Get plugged into the right groups and position yourself where the money is already flowing. If this was helpful, like the video, drop a comment below on your biggest takeaway and share with someone who needs to hear this. Thanks for watching, and I'll see you in the next one.